we started a conversation on the recently released rules and regulations from the Securities and Exchange Commission to private companies and the issuance of securities. And I still have my guest, who is Taiwo Olashore. He is the Managing Director of the Lead Asset Management Limited. Thank you again for joining us on Business Daily. Moving that now, I'd like for us to talk to, these new requirements for private companies and how these might affect, smaller companies or newer companies moving forward. What are your thoughts on that?
Obviously, to raise, in terms of my thoughts on it, I think the regulations is coming in the right time. I think over the years, we've seen quite a lot of abuses in terms of private companies just raising capital without any recourse to any regulatory authority. So by doing this right now, it's just sanitizing the market and ensuring that things are done in an orderly manner. So in terms of what they've done, as I said earlier, there's already
we seem to have lost our guest there. We were speaking to issues around the recently released issuance of rules and regulations from the Securities and Exchange Commission to private companies, especially on the issuance of securities and allotment. And we had spoken to how much of an impact they have on private companies and the general business space. As my guest had stated,
okay,
that this was just done to sanitize the space moving forward. Let's go on a short break. I believe we do have him back now. Can you go on with your thoughts, okay, Mr. Taiwo Olashore?
Okay, so I don't know where I left off. Well, I just said that it's the policy or the regulations is actually well in place. I strongly believe that we've seen in the early 2000s when a lot of private companies were raising equity. So a lot of investors actually lost a lot of their funds. So by what SEC has now done, I think they've taken care of the equity market, the equity situation. Let's look at the debt issuance, the debentures, bond issuance. So I think that's what they've actually done, which is actually, as I believe, well received.
I would like for us to speak specifically on the punishment meted to defaulters, a whopping 10 million naira penalty for defaulters moving forward. How has this been, embraced by key players in the space when the news broke out? We seem to have a bit of a network challenge there, but I would just like to point out that we obviously had seen the issuance of new rules on the issuance of securities and allotment for private company securities. And what this goes on to say is that there is a maximum fundraising capital of about 15 billion naira within a one-year period for private companies, and there is also the 10 million naira penalty for defaulters, and this is according to the Securities and Exchange Commission. And there are a lot of questions and conversations as to how these will affect private companies and also newer companies who have come into the space. But my guest, Taiwo Olashore, is back with us now. I will just like to, know, like I stated before, how the feedback or how the space and players within the space took, the news on the 10 million naira fine for defaulters within the space. What was their reaction when this came out?
Okay, there's always going to be a sudden knee-jerk reaction in terms of, wow, that's a lot. But the reality is that if you're doing the right thing, nobody sets out to start a business to start defaulting. So I think it's well received in terms of looking at what the magnitude is. What you're just saying is that if you're raising capital, raising debt instruments without getting the SEC clearance, you will be fined. And so obviously, if you're doing legitimate business, you will naturally go and get the necessary approvals before the debt instrument is actually issued to the market.
But are there any, potential drawbacks to this regulation? Because so far you have only, highlighted the benefits that could come out of this. Are there any negatives from this memo from the Securities and Exchange Commission?
So explain that. Negative in what sense?
No, I'm asking. You have over time and highlighted the benefits that would come from, this new set of rules and regulations. But one question that is on the minds of most Nigerians is, are there any potential drawbacks that we should expect moving forward?
I seriously don't expect any drawbacks in terms of the new regulations. The only thing is that obviously people have the companies, the private companies that have done the issuance prior to the regulations were given 3 months to get their act together and to get necessary issuance filed with the SEC. So I don't really see there being a drawback.
But will this set of rules affect, smaller companies or newer companies differently from the older ones? Again, we seem to have some technical difficulties there. I believe my guest is still with us. The question now is, do we expect to affect, smaller equities, private equities companies and newer ones more than the older ones? Because you made a salient point there where you talked about, older companies being affected. But the question now is, how would this affect the newer and smaller ones differently from the older ones? Fortunately, again, we seem to have some technical difficulties, but while we try to get our guest back, I will just again talk about how or what the issue is, or what the issue that we are currently conversing on is about. I believe on Friday, we saw a new set of rules and regulations issued by the Securities and Exchange Commission, where the maximum fundraising capital of 15 billion naira within a one-year period has been issued for private companies. And the question on the minds of most Nigerians is, how will this limit or expand their growth or their expansion plans, like I stated? And again, there has been the issuance or the 1 million naira, 10 million naira amount, to be paid by defaulters moving forward. And there are, concerns and conversations around how this will potentially benefit the equity space moving forward. But let's go on a Business Daily, coming to you live on Trust TV. My guest, Taiwo Olashore, who is the Managing Director, Lead Asset Management Limited, is still with us. Moving on now, Mr. Olashore, we would want to know, how would these regulations influence, particularly the behavior of the capital market operators and registered exchanges in Nigeria?
So can you repeat the question again?
How will this set of rules and regulation, that is the fundraising capitalization of 15 billion naira within a year, affect the behavior of the capital market operators and the registered exchanges in Nigeria moving forward?
Okay, so I did say that 15 billion naira for a private company is actually a large substantial of funds. So in terms of what has happened right now, they're bringing other parties to ensure that the issuance is actually a success. So by the time you bring a rating agency to come and rate the bond must have an investment grade status. You must have a track record of over a period of in business for at least 3 years of operations. So I strongly believe that comes in to be quite good. And also to add to that is that it's very few companies or very few private companies that would need up to 15 billion. But in the event that you're raising more than 15 billion, what I would suggest, based on the guidelines, is to become a PLC. So you can now, obviously, once you're now a public limited liability company, you can now seek to raise additional funds to run your business.
But still on raising funds, we're wondering how the regulations would affect the accessibility of investment opportunities for Nigerians and the business space in general. What should we expect moving forward?
So I didn't get that.
The question is, how will regulations affect, the accessibility of investment opportunities for Nigerians, especially, considering the emphasis on offering to qualified investors only? How would this impact on investment opportunities for the ordinary Nigerian who is watching?
Okay, so like most investments, I think the reason why they said it to qualified investors is because of the level of risk inherent in the investment. Since it's a private company, it's limited mainly to institutional investors or ultra HNIs, network individuals. So, which, in any case, if there's any form of recourse onto the firm, they're in a better position to pursue or to seek any redress from the issuer. So that would say that I think that's what I believe will probably naturally happen. That it's better for them to, if they need to, instead get towards the institutional investors and HNI for now, since it's a private firm, not a public company.
Well said.
And that also has to do with a lot of things in the past of abuses in terms of limited information to the general public of what's being done in the private company. So, for example, a utilization of funds, I raised money for X, Y, and what I've done is not in line with what is in the trust deed or was stated in the prospectus. So I think that's why it's not the segment of the market is appealing to is restricted for now into looking at mainly private institutional investors.
Well said there. Have been speaking with Taiwo Olashore, who is the Managing Director, Lead Assets Management Limited. Thank you for your insight on the program this morning.
Okay, you're welcome.
Unfortunately, our time is fast spent, but this is where we say our goodbyes on today's edition of Business Daily. We'll join the conversation on social media and let us hear from you how these will impact the equities market as well as the investment space in Nigeria. My name is Chiamaka Enendu. Thank you for watching and bye for now.